Texas in winter time. Hey, but it's July. Getting paid by the hour and over by the minute. All this push me over the leg. I'm on something. I think I was calling it a day. So far, sometimes it's strong, make it ever. Hey, it's on the way. It's fine. This last break is gonna take all afternoon and half the night. All night. Hey, hey, but that's all right. I ain't had a day off now in over a year. My Texas vacation's gonna start here. Yeah, on for me till I'm the silhouette and fall. Sometimes strong, make it pain. Sing, it's on the fast way. Out here. It's like saying, pay off my tab for myself and having me back to work before two. And I'm all like this, I can't help what they do. I said, oh, it's a dull and strong, making it hurt. And before I hold the same, it's on me and makes well, but I don't care. So tough and strong, making it hurt. And before I hold the same, it's on me and makes well, but I don't care. I'm just holding you down. Yeah, just about. It's my thoughts. Texas. Yeah, we had a 5 o'clock today. Well, only thing I can do is Alex Jackson. I didn't borrow that hat, man. I can say it all, you up in Missoula, there is big months to go crazy. Let's see. Feeling so sad, I sleep and got. It seems that I'm losing. Here, they change positions. interest rate. There is all you can do it. Came down Nashville, Tennessee. Got tired of the city walls and streets. And I found out with reality. Better about you than some to see. And that's why before the wheel on that way. So so if you want to make a great escape, let it run. Where the sun made a smile across your face. That's why when every is there slow you keep it so same. I say since you they keep it taking to it, same. So, That's why. Just so don't keep it to
Good morning, everybody. A nice little correction off of this move. It's finishing up some critiquing my charts, seeing where everything is at. It looks like they're all in the zone. Let me get our prep screen up here just for a moment for our intro, and we've got a couple of trades we're going to start to take immediately, which will be Russell, NASDAQ, and S&P. We'll get started in about 2 minutes, but if you want a head start, NASDAQ, Russell, S&P.
Moon in the cocktail cold, just that and the line, the sunburn brown, the good times in stereo. Get it to a full of crickets and some blue peanuts, sketching neighborhoods. And tired.
Good morning, Silk. All right, let's get this ball rolling. I had some forecast on the prep pre-market tips. We're looking for price reaction from the non-farm payroll, which came out for February's numbers. Demand 6740. These were all areas I didn't quite think we were going to hit right away, but we're down there right now. So just kind of waiting for a signal that the market's going to bounce a little bit here. Right now, we're not seeing much of anything going on yet. Oh, okay. Okay. Yeah, we're still very, very light volume. So NASDAQ is in an area. I'm going to drop to a smaller time frame and look to see if there's any accumulation coming in. Also Russell, I'm going to look for a little commitment. I think the Dow still needs to go down just a little bit more. But let's bring up the NQ. And we also see it's into a retesting a fair value gap area. I'm going to start off small, just with a couple of micros.
Order fill.
And we'll set that 587. You're gonna have to give these some wiggle room. Now remember, when you are placing a trade, okay, it should not exceed what your maximum risk per trade is, okay? So if you have in your trade plan, I'm only going to risk about $300 per trade. Okay, that's perfectly fine. Okay, if that's that's part of your trading plan. Okay. So make sure you take only one micro, and if the risk is higher than even one micro, you need to step aside and say, hey, I need to find something else to participate in because the risk is more elevated and outside of my trade plan. Okay. All right, we said Russell. Let's get on Russell. Russell, I'm gonna look for that gap fill, so I'm gonna place about 521, which is just a little bit lower. Let's size that. We're right in our prep screen zone. And so keep in mind, all of the equity indexes right now have a wide Globex range compared to the daily ATR. Okay, so we're looking for that bear trap or bull trap type scenario. Okay. And let's see, 667 limit.
Order filled.
What I was expecting to do, okay. And what was the other one? NASDAQ, S&P. I know we're hitting the ground running right now. Markets are looking somewhat bearish. Look at the light volume though. Very light volume as we're approaching the market open. Another thing to point out on the Russell is it's in between the 50 and the 200 moving average. And on the NQ, we're just testing that 200. So make sure that the risk is a little more elevated. Price goes through that 200, things are going to look a little more bearish. Okay. So it is still a little bit higher risk as we see if traders are going to step in and support this market. So taking a quick look around, the dollar has been pretty much flat all week. The 10-year and the 2-year notes have been rising after a pretty significant drop right around the start of the Epic Fury or whatever they're calling that, the war in Iran. Volatility index is shooting much higher. Okay. And but there's no buying stepping in yet. We look for the buyers to step in when the trend gets above 2. That's a good indication that the buyers are stepping in. So this is still some just volatile price action, little back and forth. Okay. When the big players start to step in, the trend will go higher. Okay. The pre-market indicator is gapping down, but not a lot. Okay. I mean, it wasn't a significant drop. So that's indicating to me that there is not a lot of selling of the stocks. And that would really kind of match up with the light volume we see on the Dow 30 stocks, kind of giving us an indication of that. Okay. So it's going to be quite jumpy today. Okay. And the media is going to play the way they play. Okay. So as prices have come down to demand, many of the institutions are looking for that price discovery right now and saying, okay, where's my buyers? Where's my sellers? And so on. Okay. And I'm just looking around here. Crude oil, massive move on crude oil again. Told you to fill up your gas tanks earlier this week. Hopefully you did, because gasoline prices are also starting to adjust. You'll probably see anywhere from 30 to 50 cent price increase, especially as we start this week. And I would say even by Monday, Tuesday, you're going to see almost probably $1 increase on that. Okay. Natural gas also shooting to the upside. But let's go back to crude oil for a moment. Heating oil has stalled. Okay. Now, heating oil is a good lead indicator. So you got heating oil, crude oil, gasoline, natural gas. They're all produced from crude oil. Okay. So the demand for heating oil, the demand for natural gas, and they're all byproducts of one thing. Okay. So heating oil is a good lead indication of the follow through on crude oil. So it actually leads crude oil. Now, crude oil is inching up based on news and so on and so forth. People pay crude oil more than they trade heating oil. But if you watch the correlation closely, if heating oil starts to drop, you'll start to see that crude oil will follow in short time. Okay. All right. Yeah, it looks like the indexes are just going to give up a little bit more. You're still stalling down there. Let's come back in Q. Yeah, that 200 moving average is that's a big culprit right there. Okay. The price may dip a little bit below that. Let's see where that 88% retracement is. Now, I would anticipate and kind of I don't know when it's going to happen, but I expect it to happen. Is there will be some update on the war, and we will see some pretty big volatility. I would expect, since the market is dropping like this and the way things have been playing out, almost like a script, um, you will something will come out that'll be very positive, and the markets will light up and take us back to the upside. Okay, but that doesn't give us an entry. Okay, I expect a volatile entry, but it doesn't give us an entry right at the moment. For 632. Setting up a trade over here. I do have a stop loss on this. I have about $200 max risk. Let's come over to the Dow. Dow is still making a new low. Prep screen zone just below it. And Russell just missed us by a tick. A couple of ticks. I'm gonna jump into the Russell.
Order filled.
Stop loss 25.17.
Order filled. Order filled.
Oopsie. Let me get my 7 stop loss in there. And the target up there about 25.50. Good old prep screen zone. And let's see, yeah, we're smack in the middle on the Russell and the dip between the 50 and the 200. And get that one set up. MNQ. Still holding. And we're starting to see a little weakness come in. You notice the heating oil started to dip and we're now starting to see crude oil. So we do need a downtrend to start on crude oil or heating oil in order for us to get into crude oil. Okay. All right, gold had a nice little setup. Still pretty volatile down here. Small time frame. Just kind of doing a long basing action. Natural gas. And notice the stocks over here. We got the top 8 large market cap weighted stocks for the NASDAQ. They're still all trading on pretty light volume. And make sure you're starting off with just small contract size, okay? The opening of the session is going to be a little bit volatile. Looks like micro Bitcoin getting a pullback as well. And we're also right around contract rollover for the 5-year, 10-year, 30-year bonds and notes as we start looking at we're next week will be contract rollover for the equity indexes. And on the 20th of March will be the 20th of March will be the last trade date for indexes. Yeah, just taking a glance, a little larger time frame on the equity indexes. Still may have just a bounce here. Okay. So manage your risk accordingly. Now, if you're a fan of the accumulation, manipulation, distribution, AMD trade setup, okay, you can see that the overnight session was kind of a range bound, okay? So we call that accumulation. And we see that the manipulation was to the downside. Okay. So we are looking for a leg base entry for the first entry. Okay. And let's see, I got the S&P. Let's find out where we have that over on the left. See, if we don't have a leg base over here, then we're anticipating where price may go a little bit lower. Oh, there we go. So we do have the first potential entry for the leg base. Now, generally, manipulation and or distribution ends or gets the first bounce in a leg base group of candles. Okay. And then we have the opportunity to wait for the fair value gap. Let me see if I bring a picture on that. Just give you a quick little. Okay, so this is something that we've been watching and observing, and the end of manipulation often comes down to a leg base group of candles. Kind of helps us define our risk on a trade. Okay. And once price bounces up, creates a fair value gap, then we have the distribution. Distribution should be back above where the accumulation level is. Okay. So this is what our plan is for today as we identify that accumulation area in the overnight session. Okay. And the London session came out, manipulation came in. Okay. Scaring people out of trades, stopping traders out, all that fun stuff. Okay. And then we're going to look for the distribution. Okay. But distribution comes in, if you don't want to take the leg base, you can wait for the turn, then a pullback to fair value gap before proceeding into this. Okay. Now that's what we would like to see. That's what we intend. Okay. That doesn't mean it's going to happen. There is still significant risk on here. Okay. I mean, we're looking at roughly about 20 points, 21 points risk here on a 5-minute chart if we were to enter onto this. So if the leg base is outside of your trade plan and too big for your trade plan, okay, as far as risk, then you're going to wait for you're going to wait for a commitment of the turn. Okay. All right. S&P hit your daily demand, 67.43. Excellent. Yeah, notice that prices really stopped moving lower and started to base a little bit here. Okay. Now, this base is inside that leg base. Okay. It doesn't always turn on a dime on the leg base. Okay. Usually turns a little faster when you're using a fair value gap type entry. Okay. So we're still in the Russell. That one's working. And the prep screens are always are the leg base. We did have an unfilled opening gap. Okay. Our first target on the Russell is about 25,550 as a bounce comes back up. Okay. And we are in the NQ getting a little bit of a bounce. Okay. I'm still underwater on that one. But notice the price is holding these levels, so there are some unfilled orders. First target on the NQ is going to be about 24,771. Okay. Well, I'm thinking of a bullish move. I'm not sure if the day will turn out bullish. Okay. Thanks for asking that, Ken. Um, Based on what we documented, and I encourage you all to take a snapshot of the picture that I'm going to put up here in just a second here. It's kind of like a road map. Okay. And if you want to do some more research, there's a lot of YouTube stuff out there to give you the basic concept, but go out and research it yourself and find these areas of accumulation. And then when price manipulated either to the downside or to the upside, okay, how did the new uptrend start out? Okay. How was it established? Okay. And once you start finding these pictures, and they can be on any time frame, and the easiest part is finding where price went sideways. Okay. Now, what we use this chart, what we use this for, as far as the AMD is, we're also including the Asian, London, New York session. So we're dividing up the start. So if the Asian session is accumulation, the London session is often manipulation. Okay. And that's why we're looking for the end of that move. And often the end of manipulation lines up with the leg base, leg base. Okay. Yeah, we can get since this is all happening before the market opened. Great observation, Wes. Okay, is we might see some price volatility around the session open, just with traders getting stopped out, margin calls and such going on. Okay, so there is that volatility around the market open, especially with the equity indexes and how stocks play out. Okay. But we got a couple of little trades going on. As we look at the potential of the move back up. I didn't get that one. Let's get rid of these. Very often the price target for the move back up is going to be back above the accumulation. So where would you want to get into the trade? Well, I would like to get in at the low point and go to the high point, right? Okay, so that low point often aligns with a leg base group of candles, or we're going to wait for conservative entry, price to rally up, come back down, find a fair value gap, and then we anticipate the move back up. Now, there's a lot of noise that could be happening along the way, okay? And but this is where the picture gets established, is by understanding where that accumulation is and understanding what market conditions you're in. Now, the market conditions are of key importance, okay? Because if we're in manipulation, and often the manipulation ends in the leg base, bounces up, okay, we know that what type of entry and risk we're going to have on the trade at this point. Okay, the type of entry at the end of manipulation, the lowest point, is going to be a leg base group of candles. The second entry is going to be when price retraces back into a fair value gap in order to start the move. Now, that doesn't guarantee a successful trade or the continuation of the direction. But the type of entry you use can help you assess risk on a trade, whereas you can properly size it, the position, to fit your trading plan. So if you have a max risk of $300, then do not exceed that risk and take fewer contracts, okay, based on your trading plan, okay, not anybody else's, okay. So at any rate, I want to stress the potential of the risk, okay. We're looking at the Russell as it did come down into a leg base, one of our prep screen zones, okay, and the picture was right in order for us to engage. Now, engage includes risk and potential profit. Okay. So just because I engaged does not mean that it's going to be a successful trade. But using the prep screen zone, I can gauge what my risk would be down to 2517, okay, which is the distal line of my zone. Okay. It's about having a trading plan and following that trading plan. Now, you may say, well, I don't trust your trading plan. Then that's perfectly fine. I'm asking you to challenge it. I'm not asking you to trust it. Okay. I'm demonstrating what I do and how I put things together, how we assess the market conditions. We look at the things on the chart and things outside the chart. Okay, look what's coming in now. We got the market open order imbalance. We're about 3 minutes, 2.5 minutes, and we're seeing a huge buy imbalance on the Mag 7. So that may help the NASDAQ 100. Okay, we're not seeing the Russell up here, but Russell tends to follow. Look at the buying is coming in stronger. Which ones are looking to be buyers? Okay, we've got Google, Microsoft, Nvidia, Pfizer, ExxonMobil, and then on the Mag 7, Apple is on the negative side, Microsoft, Google, and Meta, or Nvidia, excuse me. And you're seeing all this action happening right before the market open. So this is complements the Financial Juice is a very good site for breaking news and information that comes out. Oh, Trump's already talking. Okay, so I suspect he's going to say something about oil, about the war. Okay. And you got to watch how the attacks on the ships that are going through, that's going to be another thing. Okay. But nonetheless, we're seeing that there were some unfilled buy orders at this level. Now we're just going to see if there's enough to take us back up. Okay. So beware of the news that's coming out. Yeah, great observation, Wes. You should also have that daily limit, not only a per trade idea. Yep. And I wholeheartedly agree with your comments there. Um, Never buy based on what somebody else is doing. You can observe and see if it fits within your trading plan, your style of trading. Okay. That's one of the hard lessons I've learned as well. All right. Boom, boom, boom. How's the Russell doing? Looks like my data is a little delayed here. Looks like a few folks coming in to buy.
Order filled. Order filled.
All right, let's get back over to the NQ. Let's drop down to the smaller time frame. And what we're going to start to look for now is that fair value gap. Right now, we just got a few people that covered the shorts. Trend is low. Okay, great observation. So it's going to be jumpy down here. Yeah, we're still seeing the volatility index move up. The trend is low. So let's don't have to jump in right now. Expect that additional volatility. Okay. And we're going to be looking for that little move up, then we're going to look for that higher low to add on to a position. And it looks like the data is running a little slow on my computer. It just haven't been that way for but hold on, you guys watch your charts. Mine are just a little slower. And then keep a close eye on that 200 moving average on the NQ. Wow. Second. See, I'm going to pause for just a second here. See if that speeds up my chart. Well, we're getting a pretty significant move off of just a couple of micros. Did anybody get in on those trades? Just out of curiosity while I'm waiting for my charts to come back up. Woo, look at that volatility. Oh, you caught the S&P? Excellent. I'm gonna stop sharing for just a moment. Hopefully this doesn't mess up our YouTube. Seems to help free up my RAM or whatever. You can free up some things here so I can get back up and running. Guess it's time to get another computer if this one's not gonna perform good enough for us. All right, we should be going now. All right. See nothing, no fair value gap yet. Let's come over to Russell. No, we're still not there. So you haven't missed anything yet. You haven't missed an entry. I'm gonna have to focus on one though. Bank index is not looking too hot. Stocks are going lower. How about crude oil? High tide base forming on heating oil. The heating oil, crude oil is getting a little more extended. Nothing on gold. Bitcoin's coming down. Soybean meal. Oh, the ags have had some attention drawn to them. And generally during the war times, agriculture products tend to start basing and starting an uptrend because they're replenishing a lot of the foods and supplies and things like that. You looking for 25.40 on the S&P? No, Russell. Prices are still holding. But a lot of whipsaw and volatility. Use your gauges outside the price chart. The volatility index has just keeps shooting up. It's up about $4. Okay. And there's a lot more fear coming into the marketplace. The trend is low and the markets are dropping. Okay. This is more of a squeeze. Okay. When the trend is high and the markets are ascending, that is also a squeeze. If the trend is high and the markets are dropping, that's when we want to look for the opportunity to go long. If the trend is low and the markets are dropping, okay, that we want to wait. If the markets are ascending and the trend is low, then we look to jump in for supply. Notice the tick and the tick Q, the big difference right now. Okay. The NYSE tick shows a lot of selling going on. The VIX is high, the fear gauge is high. Okay. The market's gone mad. Nope, it's still there. Let's get out to their exchange traded funds. It's just given us some really good opportunities, but the public does not look at market drops as an opportunity to go long. Okay. The public is fearful of the markets dropping. Okay. They've been told not to catch the falling knife because they don't know what they're looking for. Okay. We're looking for areas that may coincide with a demand or supply level. Russell's still holding out. With the NQ and the S&P, they have a little bit further to go. Dow, let's get over to the Dow. All right. The Dow also in a fair value gap, but notice where the 200 simple moving average is on the Dow. 46,931. Ooh, that's going to be a good one there. So I'm going to put my order out there ahead of time for the Dow. You know, we're seeing where the 200 simple moving average is, but I'm going to use our prep screen zone, 46,829. Are you watching the percentages that the indexes are down? 846,829. I'm gonna come in at 830. Okay, order set. If the Dow does drop down to this level, we'll be over 2%, about 2.25%, probably about 2.5% down. Okay. When we observe the equity indexes down, Russell's down 2.5% right now. Okay. Nasdaq's holding out pretty strong. Dow's down in the zone, S&P is also holding here. So we may be just waiting for Russell to dip into that area and the Dow to finish its move. The mad market is good. It's a mad, mad market. All right, what else do we have as opportunities? Crude is a crazy, gone mad, that's for sure. Another 10% move on crude. I did start watching gasoline RB. Okay. And we can see what it's done in the last few days. Gone from about 248. Yeah, so at least a 30 cent plus, yeah, I'd say probably about a 60 cent move once it gets to the gas station. What else we got going on? Dollar has not changed. And the 10 and the 2-year yield are diverging at the moment. So things are getting messy as the banks and institutions come into this. Now, the challenging part is you've seen a massive move on the markets. But if you're not in a trade at the moment, okay, or have a direction that you plan to take a trade, okay, things are going to be a little challenging for you, emotional even. Watch for prices to turn on the quarter hour as well. And I hope you're starting to notice when uh, Senior Advisor Hassett comes out, Secretary of Energy, okay, Defense Ministers, White House Economic Advisor, all of these are starting to come out and do TV interviews around the same time. Okay, same time each day. So start paying attention to that because that's also creating the volatility just a little bit after. Okay. Oh, thanks, Harvey. Let's go down. Oh, nice. You had a higher time frame. And it's in a buy territory. Nice little trade opportunity on micro Bitcoin. Make sure the risk fits within your trading plan. That's a pretty good size risk. Okay, so what I'm waiting for here now on the Russell, and notice with all the drama around the open, all it did was base. This is telling you that there's some big players holding price around this level. There's more buy orders than sell orders. That doesn't mean there's an entry yet. You have two specific entries that we follow, which is the leg base entry, which we already took and we're in off of the larger time frame. And that's how we're managing the trade. Looking to get into the trade now, I need a fair value gap if we're going to start making the move back up. We just went through accumulation. We're seeing the manipulation, okay, before we see distribution and price coming back to the upside. Okay. Now we know what to do. We just have to wait for it. And we have to look for clues that it's starting to happen. Okay. That way we're prepared for it. We're still waiting on the Dow. We got a nice prep screen zone, 200 daily moving average in the same general area. And let's go over here. Let's assess how our futures oversold or overbought at the moment. Right now, the S&P is down 112 points. down 1.65. We have 25 Dow stocks negative over 94 cents times 2 would be about 50. So yeah, we're about 64 points oversold. S&P futures oversold relative to the cash market. And also the S&P, notice what it is approaching as well. So as far as being bullish, price often defends that 200 moving average. Okay, and we have a Fibonacci level there, 88.6, 66.79. Okay. We're going to watch for when price arrives. We want it to arrive on the quarter hour or top or bottom. Okay. So we just passed the quarter hour. It has not arrived there. So we got about another 15 minutes. And if price comes down to the prep screen zone at the top of the hour, then we'll execute on that trade. If not, we're going to wait for the turn. And we do have some areas up above as far as profit targets. Having a specific methodology and an approach to the market, you can start planning what you will do if these things happen. Okay. So if you're not in a trade at the moment, okay, realize it's okay. The market has not given us an entry, especially on the S&P or the Dow. Okay. And that's what we're waiting for. So we assess the S&P or the Dow 30 stocks to see if futures were oversold or overbought. Okay. We will often see that price will balance out, or the futures will balance out with the cash market, generally around that first hour, hour and a half of the trading session. If S&P futures are going to balance out with cash at this moment in time, price would have to move up approximately 60 points. Okay. So you start going, oh, 60 points from 725-ish. Okay. So that would take us right back up into this area right here. This is where cash and futures are balanced. Using a fair value gap, okay, method and approach, okay, as far as the picture on a price chart, then calculating the cash value and comparing it to the futures, you'll see that, you know, when they talk about fair value, that's kind of what they're measuring. Okay. Now we took a little different approach to get there. Okay. But we got some factual information that you could test, you could verify, and you could see if that is something you can use. Now that gives us a direction. It doesn't give us an entry. Okay. It gives us a direction that we're looking for cash and futures to balance out. And currently at this moment in time, that's back up there about that 67.76. Okay. Now, sometimes when you take that approach to the market, okay, you get a very bullish sense or you start trying to trade it from here. That's not what I'm suggesting. We have an entry, potential entry, 67.06, 66.85 being a protective stop loss. We can assess that there's approximately 20 points here, okay, risk. So you say, well, how much am I willing to put towards any trading idea? Okay. Well, if I have 20 points risk and I'm using 1 micro, then how much dollar amount is that? Okay. Start putting the pieces together. Build a plan. Now you might not even want to take a trade based off of the prep screen zone. Maybe you like them, maybe you don't. Okay. But I encourage you to go over and verify them and see if they work for your trade plan. All right, we have been sitting in this NASDAQ up and down. The fact that it has not gone lower implies to me that the 200 is holding. at the moment, and there are more buyers than sellers on the NASDAQ 100 stocks. Okay. We had a fair value gap, 24,631, 24,587. Okay, which is also that Globex low. Okay, our first target back up to a fair value gap. Okay, about 24,771. Dow, we are still waiting. S&P, we're still waiting, and both the S&P and the Dow will be testing that 200 period moving average, which is then going to spark a whole new series of well, how do you want to say it? Media hype, bear market. You know, okay. Now, very, very often price respects the 200 period moving average. That's what we're going to look for a bounce. Okay. If it's going to turn into a trend change, well, we might have a little bit more work to do. How's our Russell doing? Yeah, Russell hasn't violated anything on our trade plan. Okay. We knew our risk going into the trade. I think we had about $93 risk. We still have $93 risk. Okay. That's on 2 micros. And what we're waiting for now is price to turn, give us a place where we can add on to that position. And we can only add on if a fair value gap presents itself to the upside. Okay. We're 7 minutes away from the 10 o'clock reversal. Okay. So traders are also have that in their mind. Okay. Yeah, gold hasn't done anything. I'm really surprised the metals haven't done much. You know, this might, I don't know if it's going to be the rally, the base, and the drop, or if this is going to be a continuation. This is a high tight base up here. If you look at the last move up, that's only a 23.6% retracement. And very often you have 1, 2, 3, 4, 5, 6. Point number 6 is where to get in, and point 7 is the breakout. Okay. So when you have that high tight basing going on, anticipate the momentum is still to the upside. But notice the crude oil doesn't have the same picture anymore. So crude oil's taking the spotlight. If heating oil continues to move higher, we'll see the crude oil futures move higher. If heating oil decides to drop, then we'll start to see crude oil come back down as well. Now looking at the tick charts to see volume and see if there's any momentum coming in, we're still kind of waiting. Russell is basing out. Dow also basing. We still want the Dow to come down a little bit further. See a very different picture. And this is why I use the 4 charts on the 4 indexes on tick charts, so I can get a little different view, and then go to a time-based chart. Okay. And they're very different at this moment. Okay. Now one is bound by time, one is bound by transactions. Okay, we're 4 minutes away on the Dow. Now in a perfect world, the Dow will get that little drop down to 46,829, test the 200 period moving average, and we're right around that 10 o'clock reversal. We'll look for a rebound off of that. Our risk, is about 40 points. Let's see. No, it's about 300. Yeah, it's pretty 46,829. Yeah, that's a little bit bigger. I gotta get my calculator out here. Oh, 236 points. Woo! Yeah, that's a little risk. That doesn't mean you have to enter there. Okay, you can wait for a price to interact with the zone and then jump in on the smaller time frame once you have that fair value gap created. All right, we'll see you later, Wes. Okay, for the Dow, as we're approaching and wanting a potential trade opportunity, okay, we need to observe the steepness of the slope at the moment. Okay, as the markets move down. Okay, in order to get a reversal, we would need to see price take out one of the fair value gaps and then create one. Okay, to have a place to enter. And so I hope you all being pretty patient with yourself as far as finding an entry. I know it's a little frustrating seeing such big price movements and not being able to participate in it because the trade plan, your entry doesn't allow you. Okay. We don't have to take unnecessary risk. Boy, quite the whipsaw. Yeah, notice how the daily chart on the NQ is interacting with the 200 moving average as well. No entry on the small time frame. 10 o'clock. Approaching. Just because it's 10 o'clock reversal, that still doesn't give me an entry. And notice the volume right here for this big of a move, a 1.5% move down on the S&P, you would expect the volume to be a little bit bigger. Okay. So the whipsaw is still going to be there even for these small turns. Don't chase it. Don't chase it. All right, I'm going to pause the screen for just a moment. The charts are slowing up. I want to get over to the Dow and the S&P. I'll come back. There we go. This takes a couple of seconds. Russell's holding that prep screen zone pretty good. Boom, boom, boom. Remember, the max risk on this trade was 93 bucks. It still is 93 bucks. So what should be standing out is the prep screen zone has been here for several weeks now, okay, for several days. And the unfilled opening gap has been here. The leg base has been here. Okay, well ahead of time. Down. No entry. You got to take one fair value gap out and create one in order to start to move back up. And we're still sitting on our 2 micros on the NQ. Oh, hitting that first target. Nice entry. But boy, the drama to get here, right? What was going on in your head through this whole time? Think about how many times you got stopped out when you only needed to take one stop. Yeah, it looks like the S&P and the Dow are going to be on the back burner for a little bit. A little bit longer. We have potential of a fair value gap being created. We're just working on candle number 2 at the moment. Let's see if Russell's given us a place to add on yet. No, come on, chart. All right. Maybe we're going to start to manufacture that turn here. We're still a few minutes away from doing that. Excuse me. Still 4 minutes away from even creating that first fair value gap. Dow, same thing. Okay, now when you're watching the fair value gap being created, candle number 3 must complete. Candle number 4 is where you enter. So think about this. If you took a poke at a reversal like this and the fair value gap is being still created, okay, and we've all done this, is that you have to realize the wiggle room, this price needs to come back down to 67.34 on candle number 4. So if we're looking at this on the S&P, and let's just put candle number 1, candle number 2, and this is candle number 3. Okay. So candle number 4 is where we enter the trade. Remember, the fair value gap is a 3-candle pattern, meaning the candles must complete. So if you're looking at the opportunity to jump in, okay, thinking you're going to miss it, okay, just study these 3-candle patterns and say, well, even if price closes up towards the top of the candle number 2, price still has to come back down to the fair value gap area, which is the top of candle number 3. Okay. So let's start off with 1 micro on this. We're going to have to give down to 715 is our protective stop loss. We still have 1 minute and 36 seconds left in order to complete candle number 3. Okay. So while we're waiting, let's look up and left and see if we have another fair value gap up above to where we see a short-term profit area. And we want to see if price has tested that range yet. Looks like we've already come into there, so there's a little more weak around that fair value gap. And we have a fresh one up on top. Okay. So we still had 1 minute left. Candle number 3 must complete. If candle number 3 goes into candle number 1, then we got to start all over. Ah, dang it. This is what frustrates me. But notice the conversation that we just had as we were planning to enter, and if you jump started it, then you're going to be sweating a little bit. You're going to start all that head noise, those conversations that you have in your head about, did you do the right thing? Did you not do the right thing? And so on and so forth. Now, the larger picture that we've been discussing is still looking at the 200 daily moving average, and that's right around 66.82. Okay, so let's put a line on there, 66.82. And let's color it. There's our daily 200 moving average. Okay. So in waiting for the fair value gap to complete before engaging, okay, you just saved yourself a lot of head drama, I guess you could call it. Okay. So we start all over again. Remember, a fair value gap trade entry is based on momentum and direction. Okay. A leg base group of candles is based off of reversals. Okay. We've documented that hundreds and hundreds of times. We get bigger price moves or reactions out of the leg base than we do. And then once the market has started trending in one direction, then we can use fair value gaps to splice in, add on, and do additional trade management, adjusting stops, adding on to positions, and so on. I know I'm kind of spinning the wheels here. Dow. Ooh. Now Dow has formed. We have a stop loss, and it appears that I'll be getting in just a little bit late. Stop loss. Still. Do I choose to take the risk? Yeah, let's start off with a couple, 1 micro or 2 micros here. And stop loss is going to be about 47.30.
Order filled.
$204 worth of risk. Now you might say, well, that's a little outside my trade plan. That's fine. Okay. Take it down one, get $100. Or now that you realize the risk, don't just get it, stay there because you got a little green on the screen. Okay. We jumped in early before, oops, sorry. We jumped in a little bit earlier than the prep screen zone. So our expectations is just a short-term kind of bounce. Okay. But you're seeing the fair value gap working. You just didn't see it follow through on the S&P. As we take current price and look up and to the left, let's find the opposing fair value gap areas. For that a potential profit. Yeah, see, the S&P kind of canceled it out. NASDAQ is still working from our bigger picture, and it's starting to take out that first fair value gap, or opposing one. And our Russell is still working. Right off our prep screen zone. Crude oil. We do have a natural gas report coming out in about 15 minutes. Noticing the picture on natural gas accumulation. So what is this? It's all manipulation to the upside. Okay. If distribution comes in, we will look for a profit target below this accumulation area. The accumulation area was formed during the Asian session, London, and start of New York session. Okay, was all manipulation. And we can look for, if we wanted to take a trade on this one, where would our entry be? And where would our protective stop loss be? And one thing I do want to add to this is do not use or wait for, don't use the pivot, when we get that first drop, okay? The risk is much higher if this first drop is in a leg base, then you can participate. If it is not, then it just becomes a pivot point, and taking that first fair value gap without any commitment to the turn is higher risk. That's what I've been noticing is like, I want to capture the bottom, but I want to get some momentum to the upside. Momentum can be in the form of a bounce. Okay, like what we've seen on the YM. Okay. But generally, if the Dow did not drop into a leg base, you don't want to take that first fair value gap or you want to understand that the first fair value gap is going to be additional risk. Okay. There's a picture we described. The low part of manipulation goes into the leg base. If the trend and distribution is going to follow through, then a fair value gap will have been formed for you to participate in it. Okay. This is getting into some very, very specific mechanics of the turn, but not only understanding the price, how to execute and manage risk on it. Okay. Concepts in trading are fantastic. They get us to the right place. But if you don't have your entry types and risk management in mind, it's going to be difficult to engage. And even though I've had some really great concepts of understanding in the marketplace, whether it's Fibonacci measurements, supply and demand, if I didn't understand how to execute on a trade, and that's not just hitting the button, okay? What do you need to see specifically to execute on the trade? Okay. And that's why I keep bringing up the fair value gap type entry, which is more trending market conditions, the leg base entry, which is the reversal point. Okay. So just reiterating on the picture down below, the end of manipulation, the end of distribution often align with the leg base group of candles. Reversals. Between the reversal and other reversal is the fair value gap, is how we use to execute the trade and splice into it. Woo! There we go, Russell. Okay, Russell still hasn't built a new fair value gap to splice in or add on to our position. So we're just expecting this to be a bounce. Watch the time. Between 8 a.m. and 11 a.m., banks and institutions complete their order flow. We got to understand that banks and institutions are in control of the markets based on their buying and selling activity during this time. Anybody staying in any of these trades? And it's okay if you're not, okay? What I want to encourage you is listen to what I'm telling you, see how you can utilize it in your trade plan, okay? And then test it. I'm not asking you to trust it. I want you to tear it apart, pull it apart, ask questions. And by the way, we do have our Mastering the Charts recap and review session coming up in about an hour after we wrap up this session. That is the place to ask the tough questions, okay? Why did this work? Why did it not work? What could I have planned better? What could I be looking at? Notice that the buying activity over here on the tick Q, we are now at the extreme upticks over downticks on the NASDAQ composite. So buyers are coming in. The trend still remains low. The VIX is just pulling back a little bit, but this is odd. The 10-year yield is moving up while the 2-year yield is dropping pretty significantly. And the dollar is going flat. So the conditions are a little bit more abrasive. Russell. Okay, still no fair value gap to enter. Need to take out one and create one. Yeah, how's that? So far, the nice mention on the micro Bitcoin earlier. Thanks for mentioning that. Price came back into a leg base. We noticing the markets are kind of slowing up a little bit. Getting a nice accumulation of orders. Dropping to a tick chart to get a little different picture. We do have a fair value gap on a tick chart, but not on a time-based chart. Time-based charts tend to invite a lot more of the novice traders into the market because most of them do use a time-based. Okay. The tick charts really show what's going on as far as the number of transactions per candle. You can trade either one of them. Okay. This is still a fresh one. And Q is doing pretty good. We only got 2 micros on this, right? No, 2 micros. No way to splice into it yet. See, if you were taking that reversal or that bounce on the Dow and the S&P, you probably got a death grip on the mouse, and you're just watching every tick. Okay, rather than having a trading plan, you're just trying to anticipate. Do I want to take the money and get out? Okay, that's a common thing that people do, and they get lulled into those feelings, that rush. Okay, you want to change it to where you have a specific method and approach to it. Russell has not produced a fair value gap to add on, so my risk is still lower. I can always take a profit anytime. Okay, and don't get lulled into staying too long, especially when we're not getting any setups yet to add on to the position. Okay, or to adjust our stop loss. What's the time? Let's see if price is going to take out a fair value gap. Once it takes one out and creates another one, then we can start to participate. I still think we're going to come and test the 200. Heating oil's getting a little weak. And we talked about the VIX being high, and of course this is you got the VIX fear gauge. VIX is low, time to go. VIX is high, time to buy. Yeah, you see that Trump is moving some of his cabinet members around as well. There's been a lot of talk about the Border Patrol and stuff. don't always take that as a negative. And sometimes you got to move qualified people to different positions. Somebody might interpret one as being fired, or, you know, that's how they might want to say it. But what position is that person going to fill? You know, it could be just moved up in ranks, could be moved down in ranks. Okay. I think there's some bigger things that that person is going to do. Now, this is a tough part, waiting for the setup. Because the longer that price just fluctuates in an area, the more that self-doubt comes in. If you're starting to feel that, pocket your profit. Wait for the next setup. Okay, the Dow and the S&P still have that 200 daily simple moving average in focus. The Russell on the small time frame has not yet produced a new fair value gap. Now, although the large time frame is producing one, it still needs to complete. Has to take out one, which it just did, create one. In the creation of this, that third candle must complete, and then we'll look for the entry based off of that. Now, the larger time frames are starting maneuver, but the smaller time frames have not yet committed to the turn. When you start having these conversations with yourself, you start to realize that, you know, these are just mechanics. It's not that your trade is wrong. Okay. Don't get sucked into the fear of missing out. Learn how to maneuver around the markets, being very specific and very logical in your approach. Now, as I'm saying all of this, I'm kind of pointing the fingers at myself to remind myself to do the same thing. So often in teaching, I find that, when I'm reminding you all of rules and how to engage in a trade, that it's my self-talk that I'm looking at. See, I'm down here on the 5-minute chart, then that NASDAQ has still not formed a fair value gap to add on or even adjust the risk. So we're based off of the larger time frame. We still got about 10 minutes for this one, as we've taken out a downside fair value gap. We're still about 9 minutes before creating a new upside fair value gap. So even though I don't have it on my radar, or I don't have it on my finger on the button, I'm prepared to take a quick profit here. Are you guys getting anything out of this as far as me narrating around? I know that sometimes you just want to see a trade, but once you're in a trade, what do you do? And if you're not in a trade, how are you going to get in? Hopefully you pick up a few things. All right, we just hit, we got natural gas. What did natural gas do? Okay, natural gas came back up into a fair value gap, stop loss. Okay, now you could take the risk on this one. I'm going to initiate the trade if price comes back out of this level at 3112. My stop loss will be the high candle number one, which is about 3135. Okay, I'll put that on once I'm filled. But the better opportunity would be once a new fair value gap is produced to the downside, Okay, then we have our double top in, and then we're looking for trending. Right now, we're looking at reversal. Okay. And if this area over on the left-hand side of the chart did not align with a leg base, then the better choice is, or this is a more aggressive entry, and we should wait, a fair value gap being created will probably be less risk. All right. Well, we've come to the end of our session. We'll be meeting for our recap and review, which will be over in about an hour. We'll start with that. We'll continue with our trading session. And hopefully we'll have some more trade opportunities and some profits coming into play. Okay. I wish everybody a happy Friday. Have a good weekend. Do some research. Follow up on some of the things we talked about. If you want to understand more, please reach out. We can help you with that. Okay. And yeah, we had a couple of good trades. Looks like we got a lot of green on the screen. We just entered natural gas short. Okay. Some small trades, but they're all working out. All right. So everybody have a good trading session, and we'll see you over in Mastering the Charts recap and review in about an hour. Thanks, everybody.